Broadcast is now starting. All attendees are in listen-only mode.
Well, good morning, and thank you for coming to our webinar today. We are going to be visiting with Brett Walderbach from North American, and Brett will be talking to us more today about the VersaChoice indexed annuity from North American. And in a few minutes, we'll have him join us and talk about this unique product, one of the best-selling products in the industry, and also a new update that's very soon to come with the VersaChoice. So with that, I want to thank you for attending. The webinar is being recorded today. So if for some reason you can't listen into the whole presentation or you want to check back on it a little later, we'll have it available for your listening. So with that, I do want to visit with you a little bit about some things going on here at IMES, some incentive programs, and then we'll turn the presentation over to Brett in a few minutes. So I want to start by talking to you about our business builders. And of course, you've probably heard these, but I think they're important because as a combination of ways to help you write business and make money, especially when you first start working with us here at IMES, they're very important. So the Referred Producer Program, again, is our referred program to help you help us build our business and make money in doing so. So when an agent that you refer contracts, we'll reward you with a $50 bonus. And as they write business ongoing, and this is ongoing, so as long as they continue to write, you will make a referral override. It's unlimited, and it's unlimited in a given year. So anyone you know out in the field that's working with fixed annuities, life insurance, Medicare, refer those people to us. We'll be glad to follow up. Also, our marketing reimbursement program, which goes along with new producer program, is again dollars that we throw into an account for you as you're writing your business, whether it's target life premium, single premium life, or indexed annuity business. We will throw money into, there's a conversion, we'll throw dollars into those accounts, and then as you have business expenses, you submit those receipts to us, and we will then reimburse you for up to 50% of those expenses. So again, our way of helping you build the business and help with your costs. And I did mention the new producer bonus. Again, as you can see, these are the thresholds that you want to at least try to target in your first 180 days of contracting with us. So as you can see, there are different reward levels. At the end of 6 months, whichever level you're at, we will help you out. Again, there would be also at a $500,000 level, there is a cash reward or gift card available at that level also. So again, way to jumpstart your placing business with us. We want to reward you for that. And again, it's not required that you use those necessarily if it's cash, for example, for a business expense. You can use it for whatever you'd like. Our back office support here at IMES, I think, is very good. I think it's the best, actually, in what we do and how we help producers with taking the load off, saving them time with what they do, and that is through case design. It's through running our illustrations and quotes on a daily basis. It's on helping you get acquainted with other carriers that you need to write through without necessarily filling something out all the time for that. So again, let us know what we can do. Let us know what your cases are. Let us know how we can direct you to save time and spend more time doing what puts money in your pocket. Our creative department is a area of growth here at IMES, probably the fastest growing department of our whole company, because more and more agents are looking for ways to prospect and brand themselves. So Jacob and his team are working with many producers now on building or updating a website, branding, kind of tying in everything they do to their customers and kind of brand that all together. So if you have those needs, reach out to Jacob, Sean, and Aaron. They'll be glad to give you an idea of what they can do and what kind of cost might be available for that. Our website is www.iamsinc.com. That's IAMSINC.com. If you haven't been to our website lately, you'll want to check it out because there's a lot of tools out there for you to use. There's a term quote engine. There's also a resource for annuities. So our current rate book is as updated as we can keep it is available on that website. So again, the same information that we have at our desk, we post on the website. So if for some reason you want to know what some of our top carriers offer, North American or any of the other carriers, what are the better selling products, the current rates and features, those are available on our website. Okay, our webinar schedule is available, and I think probably one of the most untold promoted areas is our sales resource library. So a lot of information in there for you, fact finders, calculators, resources, retirement guides, you name it. That's a great resource. Again, come to our website if you haven't been there, and a lot of information that you can use, some of which we use on a daily basis for you. Okay, and I want to talk just a moment about our IAMS Wealth Management. And if you are looking at growing your business in another market, in another way, please allow us to talk to you further about that. If you want some more information, perhaps have a conversation, we will be glad to get the information out to you. So I'm going to send out a questionnaire right now. If you'd like to get more information about a Series 65, what's involved, what's it like to test, what does it cost, what's the turnaround, what kind of revenue, all those good questions. If you'd like to get more information about that and want to grow your business in that market in addition to the insurance, we'd be glad to we would be glad to help you with that. So I just put out the questionnaire. If you do like to get something or have a conversation after the webinar today, most likely you could get some information, even if just emailed to you, about IAMS Wealth Management. We've been now in business for about 3 years, and there's been quite a bit of growth in that market, and our RIA has grown considerably in those 3 years. So again, we'd be glad to help you with that, answer any questions you have. So I do appreciate your responses to that question. Okay, moving on. Our Life and Annuity Academy is one of our best ways to get in front of producers like yourself. So if you're an annuity writer or life writer and would like to grow your business, you might want to consider attending our 2-day all expense paid training program. We have one more installment yet this year. It is September 18th through the 20th. It will be, which is a Wednesday through Friday. And we are accepting registrations for this still. We're in the selection process, as you might know, because we're already, less than 60 days out from that, and we want this to be our most well-attended program of the year since it is the last. So we're looking at around 40 individuals. If you have interest in that, would like to get more information, I will be glad to allow you to do that. You can request that next right now, and we'll be glad to answer any questions. If after this webinar today, this afternoon, if you have a question for myself, or if you have a manager you already work with and you want to know more about it, let us know. Again, it's our all expense 2-day producer training. And as you can see, some of those topics We update the program. It's not the same every time, but we do have made available to you many top producers that are in the seminar selling program, for example, and you'll also be around other top producers from around the country. So I do appreciate your responses. Again, if you have any questions about it, you can certainly ask me or anyone in our marketing team about our training. We can also get you a sample agenda from our one of our more recent programs, so you can kind of see what we cover and in what time frame. Okay, so I want to thank you for joining us so far. I did want to mention to you that we are now starting our next qualification period for our marketing summit. We do not have yet determined where that is, but the qualification period did start July 1. So that would be our social and educational event um, that we'll be holding down the road in about 2 years. So again, keep your eyes on the email. We'll be announcing the destination of that. So with that, I'd like to turn the presentation over to Brett Walderbach from North American. And
all right, thank you so much, Jim. I appreciate that.
You're welcome. You're welcome.
All right, well, good morning, everybody. Really excited to be talking with you today about the Versa Choice. One, because this is our top-selling fixed index annuity, and we're making some enhancements to our top-selling fixed index annuity as well. So really excited to share some of those updates with you and really where this is a competitive product in the marketplace today. So one of the things that I want to cover is just a little bit of who we are at North American, so you get a little background of the organization here. Products that we offer, so we're going to talk about the Versa Choice. I will give you just a kind of highlight of our product spectrum and where those fit out there in the marketplace. And then we're going to talk about the incentives as well. Jim just talked about the qualification period is just starting for the next incentive for IMES. We're halfway through the year here, and we're still halfway through our incentive program as well with our EPC program and our very first Connect 2020. So we'll have some details on that. With who we are as North American, we've been in the business for over 100+ years. So this is a nice little timeline where you can see where the North American Accident Association of Chicago was founded in 1886 and how that has evolved to where we are today as a Sammons member organization. And with Sammons Financial Group and the North American annuity business, we are the only privately held and employee ESOP-owned insurance company out there. And that's a big deal right now because you're seeing a lot of movement on what's going on in the marketplace where carriers are making pullbacks to their products. They're changing rates on a decline. They're pulling back commission. They're pulling back roll-up rates on guaranteed lifetime income. And they're making a lot of adjustments out there. And here we are making great enhancements to our top-selling accumulation product in the marketplace to help you continue to find new opportunities out there, grow business, and close more sales as well. So with that, not only with great history in the business, ratings are important. Ratings matter. There's been a lot of new entrances out there. There's been a lot of headaches with some new entrants out there. And one of the things that is very important is being able to protect your reputation, being able to be another A+ rated carrier that you can go out there and present with confidence to your clients. So with all three rating agencies that we work with, AM Best, S&P, and Fitch, again, A+ rating across the board. So I know we have a company that's been in business for 100+ years, strong rated, privately owned company that is not subject to those quarterly shareholder returns that are first and foremost. It's all about the policyholder and the distributors that are selling these products. I mentioned we'd cover what products that we offer. Today we will be highlighting the Versa Choice, especially with the exciting changes on there. But you can kind of take a look at our product spectrum or our color wheel on where we have the North American products. So I want you to just keep this wheel in mind. And if you didn't know where Versa Choice was sitting on there, I'd like you to think about where you would place this on a wheel like this. We have it in a spot around accumulation. I'd love to see kind of what you would come up with. And if you have a couple of questions that come up with that, please ask those as well. I'll be able to field those after today's call. Now let's talk a little bit about the Versa Choice and who is a prospect for this North American Versa Choice. So this is, I mentioned our top selling solution out there. We just showed you the color wheel that fits on the accumulation side. But what would prospects, be asking questions that might make you think about, you could be a good fit for this type of solution. So that's clients looking for a lot of different things. Safe accumulation, looking for an alternative way to de-risk their overall retirement portfolio. Someone that's got concerned about being able to get access to their money down the road. We're in a really unique environment right now. Volatility has been relatively high. The market's begin touching all-time highs again. Last I checked, it opened today over 3,000, and the volatility rates are pretty moderate out there. But what about those clients that are, unsure of what they can expect from their life and also from, the market environment, and just looking for a little bit of peace of mind and some peace of mind benefits to help them kind of navigate that through this environment. And then you have those that are worried about the volatility of the market in itself, and how long is this going to go on, and how can I protect myself from that as well and protect my gains. So we are in the biggest economic expansion in history. So don't forget to talk to clients about protecting those gains. So entry point is a big deal in the marketplace. So the last I checked, it was not buy high, sell low, it's buy low, sell high, and protecting those gains and having a strategy in place and a solution that you can utilize for that. So, and that's where Versa Choice for accumulation, is the lead story with this product. It's a nice, simple story based around the S&P 500. So an S&P 500 index options to help them grow that business. The thing that we love about this story in the world of fixed index annuities, it's available in 49 states. The only state that we don't do business in is the state of New York. The product is the exact same thing in all 49 states. Whether you're here in Iowa where I'm at, or you're in Nebraska where Jim's located at, or in Washington, California, New Jersey, Pennsylvania, Texas, it's the same product. It's the same strategies. It's the same rates. So what's changing for your client is their surrender schedule. It may be more favorable than just the standard surrender schedule. So when we're talking about accumulation, things that are important are crediting methods and what those crediting strategies can offer your client. So this is where we're making enhancements. So one, we're not making any declines in interest rates at this point on our strategies. These are going to be our rates effective on 7/30, so next Tuesday. So what's new on there is being able to keep that story simpler. We did have the S&P Mark V Access Return Index on a margin. That's moving to a par rate story. So you're going to get up to 80% participation on a 1-year point-to-point with the S&P Mark V. So you don't have a margin to explain, and you have to overcome that first. You get X amount of participation to that index over the year. So if you like to go a longer duration, you can go 2-year now inside of the Versa Choice. We haven't had this before, but we've been having it asked for by the top producers, by our marketing distribution partners like IAMS. You'd really be able to enhance your competitiveness if you could put a 2-year index option on there and give them better upside potential. We've heard that, we've listened. Now we can give you that biannual point-to-point on a participation rate to the S&P 500 at 45%, and we can give you 125% of the Mark V. So, and that's important because not only do we take a great story, but we can make it better for your clients, because now you can have the diversification of different index options inside the S&P 500. They're very easy to explain. It's either going to be a cap on an annual basis to the S&P, monthly cap to the S&P. You can do a participation rate to the S&P on a 1-year or 2-year basis, and we have 2 low volatility index based off the S&P as well, where you can get a par rate or a margin. So very simple story, really going to enhance what that's going to be for your clients that are looking for that safe growth, that are still looking for that growth. You have the ability to give them a win-win proposition inside the index annuity. If you're worried that you're going to miss out on the market going up, that's great. We have the ability to help you maximize that inside of the annuity. If you're worried about it going down, we're going to give you that downside protection, and you're going to be able to get your option for the next year based off that low point where you didn't lose any money. So it's a great win-win scenario for those clients that have a lot of concerns about the environment today. So the other part of this is, okay, so 125, 80, 45, that looks pretty good. What could that potentially mean for my client from an illustration standpoint? So that's the other portion of this. First of all, I like to always level set expectations. These are fixed index annuities, so they're insurance products. These are not investments. These are not equity alternatives. So these are, sold for the principal protection, and the worst case scenario is you get a zero return. You don't have any standard fees inside the product that you have to pay for. So you can do an optional rider if you'd like to, but there's no fees going to drag this down. So the worst you're going to do with a $100,000 investment is have $100,000 the next year if the market declines because you're not directly invested into it. But we can offer you upside potential, but it's not an equity alternative. So there's no risk whatsoever inside of here. So you can see, if you set expectations around maybe 3 to 5%, you could push that a little bit by using the 2-year point to point. There is opportunity to have great growth with a zero floor out there. So whether if you're looking at a 1 year on a cap, a 1 year on a margin, with the daily risk controls, 1 year on a par rate, 2 year on a par rate, whether if it's the most recent 10 years, the highest 10 years, or the lowest 10 years, you're going to be able to have a product that can deliver that 3 to 5% expectation. But if you get that agreement that you're looking to protect them from the losses and the burden of having a loss and having to recover from that loss just to break even, you're going to have clients that are very satisfied with the expectations of what an index annuity actually does for them versus trying to replace equity performance out of their portfolio. So most people that are trying to de-risk that portfolio are trying to look at bond alternatives. Get rid of those fees, get rid of that market loss, and that's a great place for this solution. So that's the accumulation side of Versa Choice. Real simple story. S&P family strategies. Clients understand what the S&P 500 is. They're tried and true. They've been around since the beginning of the marketplace. The other way to take a look at that is Versa Choice for some people that have additional liquidity needs, have those concerns that keep them up at night on getting access to my money. 10 years in a contract feels like an eternity for them. What if I need to get out of it? What if my health changes? We can answer all those peace of mind benefits with one rider with the enhanced liquidity option. So this rider is optional. Again, it's available in all 49 states, including California. So, and what this does is it gives them the ability to take the core liquidity of 10% out starting year one of their current value and give them some additional enhancements for 50 basis points. So, and it's important to understand that just off the base contract with no rider, you can take 10% in the first year if you need to. Most people won't utilize that, and it's important the way we give them the enhancement to the first benefit and enhancement to your penalty-free withdrawal. When you get into day one of month 13, you could have up to 20% of your current value available to you for a penalty-free withdrawal. So if you needed to grab money, you could take up to 20% with this rider day one of year two if you didn't touch anything in there for the first year. Again, most people don't do that, and for good reason. As an agent of that person, you're not going to advise that because you don't want to get hit with a chargeback on the distribution that's being taken out. Plus, if you needed money, we should have left that out of the policy in the first place, so it's not missing out on interest opportunity. The other part of that is you get extended buyer's remorse sometimes with people. Maybe they see the first year, you did a great job, you protected them from a major correction, but they forget about the fact that I didn't lose anything, but that zero for whatever reason was just not okay for them in a down market. So, and they feel like, well, maybe I'm missing out. Maybe I should be looking at getting back into, into a higher risk type of actual investment versus an insurance product. So, or for whatever reason, maybe they get sick and they just want to pull the plug. You could use a full return of premium after you've completed 2 years of the contract. Put in 100,000. Worst case scenario, you're going to pull out 100,000. You could even take 20% in the first part of year two, and then when the end of that second year is done, you could take the remaining part of your premium back out of there. So worst case scenario, after 2 years, if you wanted to pull the plug on that and get out of an annuity jail for free, you'd be able to do that being no worse off than where you started. The 50 basis points fee for those first 2 years wouldn't even be realized by the client because they would get all of their premium backs at a minimum. Now, if they experience really good index returns and their accumulation value minus surrender charges is better than their initial premiums, they would get to keep some of that interest. So that's how what I call the left side for everybody benefits work. This is for any purpose, any reason whatsoever, you can utilize those two benefits. But then what happens if I get sick? Most policies have some sort of nursing home confinement type of waiver on there to free up all their surrender charges. We don't have that. So because typically there's events that happen before you go into a nursing home. So we have ADL-based waiver of surrender charges. So there's one knockout question around the activities of daily living. On the disclosure, the client has the option to opt into this rider, and it'll ask them, can you perform these 6 activities of daily living? If they can do that, they initial it. Then anytime after issue, they're unable to perform the 2 out of 6 activities of daily living, and the diagnosis from the doctor is this is perceived to be a permanent diagnosis, we will be able to waive their surrender charges. Anytime after issue, you now have a liquid fixed index annuity contract. You can take what you need up to 100% of your premiums. Don't have to take them all out of there, but you're liquid. You're fully liquid inside of there. So again, it's not underwritten policy. So you have one knockout question. Can you do these? It's on the honor system. We're looking for a doctor's note saying that this diagnosis is permanent of the 2 out of 6 ADLs, and they have no more restrictions of surrender charges or penalties. So they get to maintain their interest. They get to be able to utilize that as a nice way to help free up some assets to help pay for, hopefully, in-home care that they want versus going to a confinement facility. Another option that they can utilize on that is a first-to-market ADL-based payout benefit. First question I get, so you're going to multiply their income. At any time since we've been talking about this product, we've never talked about an income rider. So no, we're not talking about multiplying income here. We're talking about taking your current accumulation value and applying leverage to it of additional interest. So what we will do is we will take your current value, all the interest that you earn, and give you an enhanced annuitization rate over a 5-year period. It'll start at 110, go to 115, 120, 125, all based on what year are you in the contract and what enhancement rate will you get. So you have the ability to create a little bit of additional leverage, especially if someone's trying to self-fund any type of long-term care need they might have, whether if they're thinking of nursing home, whether they're thinking in-home house care, private care, whatever, but they're uninsurable or they haven't even looked at that insurance, and then when they do, they become, they can't qualify or afford the premiums, they need something else. So this is a great way to take an index annuity, not go through underwriting, and be able to create some leverage. Because it's a fixed index annuity that's not underwritten, there's a trade-off. Do that to not a fully underwritten contract, and there's no knockout question around what you can do besides can you perform these activities of daily living. They're taxable distributions, whether if it's qualified or non-qualified money. It'd be all be taxable on qualified. It would be taxable on your gains on non-qualified. So those are our right side quadrant benefits that you can unlock for later needs to help with those peace of mind benefits. This is a nice recap of how that works. I'm just going to leave this up here for just a little bit so you can see the compliant way of how we explain that. So again, for benefits 3 and 4, the knockout question is, can you perform the 6 activities of daily living? Then we need a doctor's note after issue. So, and again, it needs to be a permanent diagnosis because we're not multiplying income. You don't need to requalify on an annual basis. We are taking your current value and enhancing that. So again, first to market waiver surrender charges based off of ADLs, not confinement. And that's anytime after issue. And then the first to market ADL based payout benefit. So now I want to dive just a little bit deeper on the payout distribution rate. So it does have a 2-year wait before you can take option 4. But I've never said that those benefits aren't interchangeable either. So you could have a scenario where somebody, has, a semi-catastrophic, health event. Maybe they have a stroke. They're going to have permanency with disability from 2 out of 6 ADLs. So right away, well, first thing you do is you just waive your surrender charges. You take the money that you need. You leave the money that's left in there if you can to continue to earn the indexing interest, get the tax deferral, the benefits of an indexed annuity. Let's say they get into year 3 or year 4 or beyond, and now they need to start creating leverage of what's left. What they have in there, the distribution rate they've been taking, is not covering what they need it to. They'd like to get a little bit more out of it. That's great. We can take your current value, remaining value at that time, and apply the enhancement. If you're in year 3, again, it's 110% paid out over a 5-year period. If it's year 4, it's 115% paid over that 5-year period, 120, 125 in years 5, 6 or beyond. 125% of your value is the maximum payout. So I also prepared a visual for you guys to take a look at. So this is a Versa Choice, 65-year-old. You make it through the first 5 years, you get to year 6. You have a current account value of $142,577. So you have the 2 out of 6 ADL claim. You want to do the enhanced payout versus the waiver of surrender. Waiver of surrender, you get to walk away with your 142,577. So because it's your accumulation value, because we waive those surrender charges. Or you could take, see if my animation worked. There you go. You could take from quadrant 4, you could take 35,644 over the next 5 years on a monthly, semi-annual, quarterly payout rate. You could do that. So the difference is, if you took that payment over the 5 years, your true cash value would be 178,222. That's a different of 35,000, or sorry, that's a different of 35,644 over that period. So you also have that $7,000 on an annual basis over that 5 years because of that backloaded interest. So huge benefit inside of there, for clients to really be able to take advantage, of the most out of the annuity contract and create as much leverage as possible. But it gives them choices. It allows them to leverage multiple benefits over that time that they need to. So, and then this on the illustration is the example of what could that benefit be as the policy continues to age and age, and that value gets higher and higher. So again, 50 basis points for benefits on a quick recap for that Versa Choice for liquidity. So you really have two places where you can take the Versa Choice. You've got that client that's looking for fixed income alternative. They're looking for an alternative to bank CDs. They're looking for better growth, but safety of that principal as well, locking in some of the gains they've earned out of the marketplace. The last thing that I mentioned we're going to talk about is the incentive packages that we have as well. So Jim did a great job of highlighting everything that IAMS is offering for you, but it's okay to earn additional incentives for your loyal production and your loyal business to a carrier as well. So we introduced back in January our exclusive producer connection program, or the EPC. So this is pay for additional business. The more business you put with North American, the more additional incentives that you can earn. The first threshold is at $1 million worth of fixed index annuity premium in a year. We're going to pay you an additional 50 basis points of compensation. So making street compensation as high as 7.25%. Now, just to give you a benchmark there, Versa Choice pays $675. It's a 10-year product, so you get 50 additional basis points on that on a monthly bonus. So if you did $3 million in production, you have the ability to earn an additional 100 basis points, taking that comp up to $775. And if you did $5 million in production, that'd be an extra 150 basis points, making that business $825 on compensation. So that's one of the most richest incentive programs in the marketplace. And I forgot to mention the best part. Those bonuses, those pay back to $1. So it's not, once I hit that threshold, I get it going forward. No, we're going to retro pay everything you've submitted that year and pay that bonus on there. So that's $5,000 right there when you hit that first level. What could you do to reinvest back into your business to help it grow to the next level? How many more seminars can you do? How many more client events are you able to do to continue to build out that base and add a bigger client base and get more referrals? So because it is a retro payment, we do have an example of how that works when you land on those thresholds. So again, at $1 million, that's a $5,000 threshold just in that retro paycheck plus your ongoing. At $3 million, that's another $15,000 bonus. So now you're at $20,000 of bonuses plus the in between of the 50 basis points that we haven't even calculated and the ongoing. So, and then you throw in when you hit that $5 million mark. So you've got $55,000 in bonuses, plus we haven't even factored in the ongoing bonuses along the way. Those are just your retroactive payments to get you caught up. So a fantastic program. So it's not too late. We're only halfway through the year. There's a lot of good business that's going to be taking place the rest of the year. And again, the marketplace, everyone is starting to make drops or multiple drops at this point. We're enhancing our top seller. So we're making it easier for you to go out there and tell this story. The other part of this program, as a participant in the EPC program, all you got to do is have a street level contract. So, and you're going to be eligible for that. You also are eligible to qualify for the Connect 2020 Business Summit. So this is our inaugural business summit. It's being held at Dorado Beach, which is a Ritz-Carlton Reserve resort in Puerto Rico. So what we're doing is we're sending an invite to the top 75 producers with North American and their guests. So to have a chance to, build relationships with us here at the home office, build relationships with top peers in the industry, as well as share best practices, have some great business meetings, as well as some fantastic R&R at an amazing resort. So this is definitely an incentive you don't want to miss out on. There is still plenty of time to work your way through the program and also work your way to qualification to be in that top 75. So with that, Jim, I want to turn it back over to you, see if there's any questions. And I also just want to thank everybody for time out of their day today. So thank you very much.
Yeah, and thank you, Brett. I did have a question here for you. One of the agents wanted to know, is there an income rider benefit available on the VersaChoice?
As of today, there is an income rider on there. VersaChoice is not being utilized for guaranteed lifetime income. So when we make these enhancements, we are making the decision to discontinue the sale of the rider on this product. If you want a guaranteed lifetime income rider, our Retired Choice, which is one of our bonus products, would be the place to utilize that 6% compounded roll-up.
Okay. And another agent wanted to know, is there anything in the works for VersaChoice utilizing any other indexes besides S&P? I know North American likes the S&P, but also has various indexes available in other products like Performance Choice and that. But is there any talk about adding that to VersaChoice?
At this time, I would say no, especially with just these additions. One thing that's helped the VersaChoice, and it's less than 2 years old right now, and it's our top seller that's made that such an easy story out there, is because there isn't an extremely complicated investment bank index inside of there that's very difficult to explain. The harder an index is to explain, the harder it can be to get the client to pull the trigger on doing that. So we've stayed with inside the S&P family, and the feedback and the reception that has been great. But that doesn't mean that these investment banks aren't in here on a weekly, monthly basis trying to get us to put index on there. If we find a good match, that's something that we will always consider. But at this time, we're very happy with Standards & Poor's. And we do offer like the Performance Choice where you can get access to the NASDAQ, the Hang Seng, you can get access to the Russell and the S&P 400 mid-cap as well. So those are available on some other products as well out there.
Okay, super. Okay, well that, excuse me, that's all that we had for questions. Did want to mention to you out there today that if you have an interest in getting more information on the VersaChoice product or to get appointed with North American, I'm going to launch a poll question here if you want to respond. If you'd like to get more information like a detail sheet or maybe just a highlight sheet or an illustration, anything like that on the VersaChoice 10, we'd be glad to get that for you. And if you want to add North American to one of your as a carrier to your list, we'd be glad to add a life or an annuity contract here at Insurance Agency Marketing. I'm sure Brett would be happy with that. So
absolutely.
If you do want a little information on that or add North American, please respond to the poll question, and I'll be glad to follow up with you on it today. And there it is. Sorry, I didn't launch the question. I'm sorry, I'm talking and I didn't launch it. So please respond to that. But I do want to thank all of you for your time today. Thanks, Brett, for your information. Fantastic product from North American. Very versatile and a low-cost added benefit to create a big benefit for your clients. So thanks again. We appreciate your attendance today. And happy selling. Thanks, Brett.
Thank you. Bye-bye.
All right. Bye now.